Hey everyone. Okay, so today I want to talk about the new self-employment tax base for 2021. It's $142,800. So that is the new base. It has been raised a little bit, but there's some tax planning things we can do. So before we get into those tax planning things that we can take advantage of, be sure to hit the like button, subscribe to my channel if you haven't already, and hit that bell so that you can be notified of new and upcoming tax tips and business growth tips that I come out with. All right, so let's talk about tax planning. So when lawmakers enact a new tax, it starts small, it looks easy, but there's a lot of implications when tax rates are raised or bases are raised, like the self-employment tax base that we have each year. So, I don't know, throughout history you can even see that in 1935 the self-employment tax topped out at $60. Well, now it's $142,800 base, which in 2021 that equals to around self-employment tax of $21,000, upwards of that, which is that 15.3% tax rate that you pay if you're self-employed. And then there's also a 2.9% tax that applies to all self-employment income in excess of the base amount now. So there's some tax planning that you need to do if you are a high income earner, or if you have a small business. No matter what, tax planning is to your benefit, and to have a CPA you trust that knows the different tax deductions that's available to you, and you just have that conversation. So I'm going to hit on some things that you may not have thought of as part of helping get this number, your net income number down before year end. So 2 things you need to know about tax planning. Your new deductions give you benefits starting at your highest tax rates. And in most cases, the return on your planning is not a one-time event. Your ROI that you get from tax planning is not just for this year. It goes on and on and on because of your newfound knowledge and the newfound tax deductions you're finding. You have to think of it as once your plan is in place, you reap those benefits year after year. So good tax planning is like an annuity, all right? It keeps paying you over and over again. So keep that in mind when you're looking at what you can deduct and how it will benefit you in the future as well if you can continue to deduct those things. So here's a short little list of some tax planning ideas that I want to give you, and review these ideas so you can identify new business deductions for your tax return coming up. And you want business deductions because business deductions reduce both your income and your self-employment taxes. So first of all, eliminate the word friend from your vocabulary, okay? From now on, these people are sources of business. They're customers. So start talking business and asking for referrals over meals and beverages, okay? Don't start talking about how much you pay in taxes, because Joe's tax situation is never going to be the same as your tax situation, okay? How many kids does he have? Is he married? Is he single? What type of business does he have? Is he an S corporation or just a single member LLC? There's so much that goes into play when tax planning, and how your tax situation compares to someone else is never going to be comparing apples to apples. So just when you're out with your friends, if you want to talk taxes, sure, bring up some deductions as ideas. Some of these ideas you can talk about, but it's not going to dollar for dollar reduce your tax like it does for your friend. Let's eliminate the word friend when you call your CPA and say, well, my friend does this, so I should be able to do it too. Okay, it's like your kids. They come home and say, well, so-and-so's mom says she can watch this TV show. Why can't I? All right, so think of it that way. And talking about children, another great tax deduction that you need to look at and analyze is if you have children, hire them. Hire them whether you're a Schedule C sole proprietor, which is the best tax advantage, or even if you're an S Corp, there's advantages. So hire your children. This creates tax deductions for you, and it creates non-taxable or very low taxable income for the kids. Also, wages paid by parents to children are exempt from payroll taxes in certain situations, depending on your entity type. Okay, so talk to your CPA about hiring your children. Learn how to combine business and personal trips. This is key, so that the personal side of your trip now becomes part of your business deduction under the travel rules. For example, traveling by a cruise ship to a convention to St. Thomas, okay? Flying to London and doing one day of business and the rest of it you sightsee. There's part of that you can deduct. So learn about that. And I will say my goal is to have separate videos for each of these. And so once I have those filmed, I'll link to them in the description. So this will be a great video, a summary video to check back with in the next month or so if you want to dive deeper into any of these deductions. Properly classify business expansion expenses as immediate tax deductions rather than depreciating them. Right now we have some awesome, great bonus depreciation rules in effect for 2021. And so expanding your business, huge capital improvements, a lot of those can be deducted immediately and not have to be depreciated over 10, 15 years, okay? So look at expanding your business if the cash flow there or the need is there. Properly identify deductible startup expenses if you're a new business. $5,000 up front and the balance can be amortized rather than letting them fall by the wayside. That's a common oversight. Correctly classify business meals that qualify for the new 100% deduction rather than the 50% deduction. And I've already got one video that explains that, so I'll link to that below. That's a new rule for 2021 and 2022 that restaurant meals can be 100% deductible rather than only 50% like in past years. Know the entertainment facility rules so your vacation home can become a tax deduction. That's a good one. Identify the vehicle deduction method that gives you the best deduction for business use of your vehicle. So choosing between the IRS mileage method and the actual expense method, you need to weigh both of those, calculate both ways and determine the best way to deduct your vehicle. Correctly identify your maximum business miles so you deduct the largest possible percentage of your vehicle mileage. A lot of people just think of, oh, okay, I went to this customer's site and back, that's round trip business mileage. Yes, it is. But what about when you go to the post office and mail that letter for your business? Or what about when you go to Office Depot to get paper? All right. There's other vehicle mileage that you can claim as business that you may not be doing. So let's have a discussion about that. Qualify your office in your home as an administrative office. Did you know that even though you may have a physical location in town where you rent an office space, you can also claim a home office deduction too. You can have two places of business if you organize it right. And there's a way to do allocations to make your home office deduction larger than you have in the past. So be sure to check that deduction out. If you're married with no employees, hire your spouse and install a Section 105 medical plan to move your medical deductions to Schedule C for maximum benefits. That's a tax planning move. Operate as a one-person S corporation to save on self-employment taxes. So if you're an LLC taxed on Schedule C right now, look at incorporating or look at claiming the S election and becoming an S corporation. And I also have another video that talks about that. I'll link to below. If you're single with no employees, operate as a C corporation and install a Section 105 medical plan so you can deduct all your medical expenses. So see, you can see that there's a ton of tax planning moves that you need to be looking at. Here we are when I'm recording this video, we're in August. So you have a few more months before year end to implement some of these strategies, and there are hundreds more. But the key is you have to be proactive about this, okay? Don't wait till the end of the year and think, and don't even have books together and then take them to your tax preparer, in April, and then it's gone. A lot of these deductions are gone, and so it's too late. The year's done. So always be proactive. Always be looking at how you can use your business to dwindle down that net income number legally. There's a ton of, I'm only talking about ethical and legal ways to reduce your tax expenses. That's all I will ever talk about or submit to you. So all of these there's just a lot of them that you don't know about that you need to as a business owner. Okay, so if any of this opened your eyes, hit the like button. Also in the comments below, let me know if there's any videos you want me to make on topics that you're interested in, and be sure to subscribe to my channel and check out the resources and links in the description. See you later.